Hello, everyone. How are you? Hope you're well. So, I'm going to talk about what's going on with the Feds. Jerome Powell, specifically, as you know, he is the Federal Reserve Chair, Jerome Powell. So, he just spoke recently, which resulted in the stock market going up. People listen to what he says, and it has an impact on the stock market. So, stock market went up as a result of his speech. So basically, what they are doing is working. So the interest rates, they were at 9.1% in June. So went from 9.1 down to 6.5 in December. So most recently it was around 6.4. So what they're doing is working. They do plan to continue to increase the rate hikes until they can get inflation down to 2%. So, according to Jerome Powell, he stated that it's going to take a significant amount of time to get it down to their goal of 2%. They do plan to continue the rate hikes. So, all of this year, and possibly into next year, they plan to continue the rate hikes. According to Jerome Powell, we're in a strong labor market, which I think is interesting. But according to Jerome Powell, because of this strong labor market, it's going to take time to get inflation down to 2%. So inflation goes down when people stop spending all their money. So if they have money, if they're working, then the expectation is that they're going to spend it, which will cause inflation to remain where it is. So the ideal is stop spending money for inflation to go down to that 2% that they're looking for. So, like I said before, as a result of his speech, the stocks rallied. The job market, uh, it caused some shut off of immigration, just a little bit, and it contributed to the shortage of workers as a result of the pandemic, as you know. So, the increase in wages is coming down, and so their rate hikes is coming down also. So the highest rate hike was in December at a 0.50 basis, and the prior four meetings, it was an increase by 0.75% basis points. So starting off, they increased the rate by 0.75 basis points. They did that four times. 0.75 basis points, 0.75 basis points, point 0.75 basis points, 0.75 basis points. Then in December, they increased it by 0.50 basis points. And then the most recent is 0.25. So they're still increasing the rates, but it is slower. So instead of increasing it by 0.75, the most recent increase was by 0.25. So they plan for it to take into next year to get it down to the 2% goal that they are looking for. And like I said before, what they're doing is working. It was at a 9.1, now it's down to 6.5, and the most recent was around 6.4. So the electronics, gas, and used vehicles are cheaper than they were um, compared to last year. However, food is still high. The prices of food is climbing. If you notice, when you go to the grocery store, your bill is higher, food is higher. Uh, that price is climbing. Also, rent is climbing. So the bottom line, the bottom line is that, according to Jerome Powell, it's going to take a significant amount of time to get the inflation down to the 2% rate that they are looking for. So, what is the bottom line? The bottom line is I'm not going to tell you what to do, but the bottom line is stop waiting around to do what it is that you desire to do. because they do not plan on seeing any changes this year. In fact, they're going to keep raising the hike. They're going to keep raising it. So if your goal is to buy property, go buy your property. Just make sure that it's affordable to you. Even consider getting something cheaper if this is investment property. Make sure it's affordable to you. If, however, you do decide to wait this out, then at least work on preparing yourself for rental property by getting your credit together, saving for reserves. If things happen, like if a furnace goes out, things like that, you will have the reserves. So you could at least be preparing if you plan on waiting, getting your credit together, saving up for reserves. Other than that, stop waiting and go get your property. Get something that is affordable to you and something cheaper if this is investment property that you're looking for. So if you are not in the stock market, check out the link below and get in the stock market. Join the rest of the world. Get into the stock market. If you have children, teach them. The information is right here. It's no longer hidden. Teach your children. Your children should be buying stock at age 11, not age 81. All right. So intervene. The link is right here. If you're interested in getting rental property, the link is right here. Also, pass the information to your children. Children are very smart. Children are very smart. So give them that gift of financial literacy at a young age. 11 is not too young to be learning this, even younger. Give them that gift of financial literacy at a young age instead of letting them find out this information on their own. And it's right here. You have no more excuses. The information is right here. So check it out. Also, leave a comment. Let me know your thoughts. Thank you for watching and have a good rest of your night. Bye for now.